We're trading here at record highs on some trade optimism news. Joining me is Jonathan Corpina to talk the highs. And I guess there is a little bit of concern here, Jonathan. We are at record highs. We are seeing some low volume on the charts and these little choppy candles. Now, some traders are calling this bearish. Are you calling it bearish?
Yeah, I wouldn't call it bearish at this point, but the natural conversation to have is when you see an upswing in the market like we've had and we're trading at all-time highs. The conversation always turns to, all right, what's going to be the catalyst? Are we topping off? Is this a bubble? What are the next steps to do? So naturally, risk off, taking some of those short-term profits or long-term profits off the table is what we're currently seeing. Not a tremendous shift. I think last week we were seeing shift from equities into some fixed income. Haven't seen more of that flow through this week, but at this point right now, I think investors are a little weary that the market is trading as high it is with the negative headlines that we've seen over the last few weeks.
We've also seen a lot of cash be put aside throughout the year. What do you think is going to happen with that?
Yes, I mean, there's different areas where we've seen that. So from a investing side, right, you've got portfolio managers who are sitting on some cash that they want to put into place by the end of the year. They haven't really had that real significant pullback to put that money in, and at some point that will come back in. So that's kind of what we see towards the end of the year, fourth quarter, adding to that Santa Claus rally. From the corporate side, you've got companies that have a lot of cash on hand that they've been building up over time, and there's multiple ways that they can spend it, right? They can buy back their stock, they can use it internally, CapEx, or they can go out and buy some other company, one of their competitors, or a smaller supplier. So you might see one or two rather large M&A deals before the end of the year.
Okay, because we've been talking about over the year, and we've seen it in our economic figures that business spending in themselves it has kind of gone off the deep end. So you'll be expecting to see that, or perhaps a mega M&A.
Yeah, like I think in the macro sense, yes, there is some uncertainty as what the landscape is going to look moving forward. But I think both larger corporations and investors are getting very impatient with us waiting for something to come that we know really isn't going to come just yet. So I think you're going to see some of that activity come back into play. The impatience has run thin, and when you have that cash on hand, as we get closer to the end of the year, you're going to want to do something with that. So we might start to see that.
All right, well, we also have the class of unicorns starting to report earnings. And as we saw with Uber, they aren't expecting a profit until 2 years. Now, Jonathan, our viewers have heard you and I talk about some long-term strategies, etc. What is your take on hearing that a company won't profit in 2 years?
Hard to swallow as an investor. People want to invest their money in the right areas and the right stocks, and every once in a while you try to get that one high flyer that's gonna double or triple your money. But at this point right now, when looking at the fundamentals, it's hard to conceptually put your money into a company that is telling you flat out, we are not going to be profitable for quite some time. Uber's not the only one. There's a bunch of other ones that are out there. And you want to get in early, so to speak. But it just seems right now that there's so many other areas that you could feel a little bit more safer investing your money.
Absolutely. Now, I want to finish up with asking you some changes that we heard from the New York Stock Exchange. The New York Stock Exchange American is restoring human floor trading. I saw that on your Twitter. What does that entail, and why did they make that move?
So a year and a half ago, 2 years ago, NYSE Amex switched from a auction model to an electronic model. They got rid of the DMMs for those individual stocks. What they've decided to do in time is that I don't think they saw the type of activity that they were hoping for flow to that area. They put the speed bump in, try to mimic some of the other competitors are out there, and to see if in fact that flow would that behavior would change, right? And with NYSE Amex, it's a pretty good model to try things out on, right? They've tried different order types, they've tried different pricing models, and they can make adjustments rather quickly there. So what they did see was the flow didn't come to them that they were expecting. So now they've decided to ramp that back to the floor auction model. So we're going to see the Amex listed stocks come back down to the floor here. They will have DMM market makers. We will have the opportunity to trade as we do all the other tapes A and B.
That's really exciting news, and I was looking at the chart as well, and it's so true that the power to the people. You guys make the difference here on the floor.
Thank you. Appreciate that. Our customers think so too, and so does the tape.
Well, we appreciate you every Tuesday here on Modern Wall Street. That is Jonathan Corpina of Meridian Equity Partners.